Rates matter. That's right. Rates really do matter. They matter on so many different levels, but yet most lenders don't want to talk to you about them. And the reason is they don't have rates. That's right. They can't talk about rates because they don't have them. They talk about all kinds of other stuff. They talk about your job description. I have good service. I have good programs. I have this. I have that. But that's your job description. You're supposed to have great programs and great terms and great rates and all that kind of stuff. So the reason mortgage rates matter so much is that, number one, in Colorado, especially in Colorado, you can get more house. That's right. If you work with someone whose rates are lower, you can get more house. So let me put this in perspective. And I'm going to do this in a couple different ways. One is that I'm a mortgage broker. I'm the biggest mortgage broker in the United States. And so when you're the biggest, you just get better deals on everything else. So I actually have better pricing than other brokers. Think of it as Ford or Chevy probably gets a better price on aluminum than smaller manufacturers, or better deal on tires than a small tire shop. Okay, we get better deals interest rate wise through a lot of different lenders. We also don't have any overhead. We have over 1,200 loan officers. We all work out of our house. We have one corporate office. It's in Minneapolis, and I'm in Denver though, okay? But it's in Minneapolis, and it's really just a floor. And the only people above me are the owners. And so there's no big levels of management. Things so by design, we have a lot better rates than most. And so put this in perspective. When everybody was in the sevens and stuff, I was in the sixes. Now, what that really means for you is when everybody else was at the 7.5 rate, I was at the 6.8, 6.75, 6.875. So what happens is when they went into the sixes, everybody's refining them again. Okay, well, my people were already in the sixes. They didn't have to refi. So you skipped out on having to spend another $5,000-$6,000 in your equity and or out of your pocket to make a refinance happen. So right now, everybody's in that 6.5, 6.3 creditors range. And I'm talking about 90% of the lenders out there, especially the big banks and the credit unions, because they all have a lot of overhead. Those offices are not cheap. They have tons of offices. That's all they have is offices. And you have to put heating in their faxes. You have to, keep everybody has to have a computer, pay salaries, all that kind of good stuff. And so they're just really a lot of money. So how do they get the money? Their rates are higher, because investors will pay you more for higher rates. Okay, dirty little secret there. Okay, so when everybody now is at 6.5, 6.75, I'm in the 6.125 range. And 5.99 depends on how much you put down to 6.125 kind of range, and that's unconventional. On FHAs, we're down in the, I'm going to check real quick, we're down in the 5.5 to 5.75 range, depending on where your credit is on an FHA. Now, what you see on the online are because they have to. Because if your rates are the 6.5, 6.75, and you got guys like me out here, what do? They put points on there. So now, when they put points on them, they're down about where I am anyhow. So they're down around 6%. Well, I'm already there, and you didn't have to spend, say, $8,000 to $10,000 in points to get down that low. Okay, but let's play the same game. If you were to put $8,000, $10,000 down, say on a conventional, you would be down in the, let me check real quick again, you'd be down in the 5.625 range. Okay, so you still wouldn't be at 6 or 6.125, you'd be at 5.625 with the rates they show you online. On FHA, you'd be down, instead of 5.5, 5.75, you'd be down between 4.99. And I locked in a couple of people, they put 12 or 14, they actually got the money from the seller through seller concessions, and we locked them in at the 4s. Now, we also have things out there like a 5-1 arm on an FHA, where I'm locking a guy in, he is getting seller concession money, but he's down at the 4.25 range. Okay, and that's on a 5-year arm. So probably in the 5 years, he'll refi into a conventional and drop his MIP anyhow, so what does it matter? So anyways, you kind of get the idea. I'm trying to put everything into a video here, but rates matter because you qualify for more. You might skip a refi where everybody else has to refi because they went with the big guys. Okay, and to be honest with you, we did 7 billion last year. Edge Home Finance isn't a little guy. Okay, it's just that we're all kind of independent, and so instead of me working for a bank, I work for you. Okay, so that makes a big difference too. Seller concessions are simply, I can show you how to do that. Just give me a call or text me. I can show you how to save a lot of money. Down payment assistance programs, most places have one or two places they can go. They usually have like CHFA or CHAC, Hope, or Denver Metro DPA. I have 30 plus places beyond that. Okay, and what they do is they take turns, getting who has the best rates. But also, the reason most lenders, 99% of your lenders only have three choices. And the reason that is they don't really want to do them to begin with because there's not a lot of money in them. They get paid less. The bank they work for or the lender they work for gets paid less. They only do them because the government requires them to do so many of those so that they can do Fannie and Freddie stuff. It's kind of complicated, but you kind of get the idea. The thing is, I love to do them because I know that that's usually your starter home, and you'll probably do something again in the next 3 to 6 years. Statistically, you will. And so, hey, I'm going to be around to be your guy. There's people now that I'm helping I don't want to say this, but I'm helping their kids. Okay, I know I don't look that old, but I am. I'm helping their kids, and we're just having a great time. Okay, because if you do it right, you have great rates, you're going to be in this business for a long time. We're doing webinars now for the first-time homebuyers and second-time homebuyers because a lot of them didn't know what they did the first time because no one bothered to teach them. And I got a special Colorado homebuyer help site that I'm just launching where homebuyers can go in there and we can learn a lot about a lot of these tricks and trades so that, again, you can save a lot of money when you're buying a home. Okay, so, and we're doing the webinars, like I said, and also you'll find that I'm very accessible, and also you get your own digital site. Oh, we do a lot of things for you. So anyways, call me, text me, but please subscribe down below. Other than that, I hope you have a great day, and thank you.